Today, I'll be having the pleasure of speaking with a true MSB superstar, Carinta Mannarelli. How are you doing today, Carinta?
I'm good. Thanks so much for inviting me to participate. This is very exciting. I just want to take a quick second to introduce myself in case attendees haven't seen me or met me over the years. I'm Carinta, and like you mentioned, I do own an MSB in Guelph, Ontario. We've been in operation for 21 years now, so my own company and myself have kind of wrestled with the different FinTrack obligations that have come and gone over the years. So I think this is a very important presentation that we're going to look at today. Additionally, in my spare time, I'm the chair of the Canadian MSB Association. So the MSB Association is a not-for-profit organization that exists really to support our industry. If you haven't come in contact with the MSB Association, I'd like to encourage you to Google Canadian MSB. The website is canadianmsb.org to get involved. So we basically, in the supporting of the industry, we provide training to MSBs, we provide networking opportunities, and we really just try to provide an opportunity for MSBs to learn from each other and to just help support each other, bring each other up in this industry. So my participation today, you are definitely the expert on what we're going to be learning today. But over the past year and a bit, we've heard lots of questions coming from the association members, wondering about how these changes affect their businesses, how to implement some of the changes that are coming our way or that have come our way. So I'm here to provide a voice. I'm here to interject and ask questions as you walk through the material, so that some of the questions that we've already heard coming from our membership are having a voice today.
Yeah, that's awesome. I'm really looking forward to our talk. And just before we get started, I just want to get a bit of housekeeping out of the way. So at the conclusion of the webinar, we'll send out a survey, and we'd really appreciate any suggestions that you have for future webinar topics or things that we can do to improve future presentations. And if you're looking for a certificate of attendance, then a completed survey is the price of that certificate. But as thanks for returning your survey, we'll also provide you with a quick reference guide outlining the new PEP obligations. Our free gift to you. Okay, so if during the presentation you have a question about any of the topics that Carinta and I are discussing, just type into the chat box, which is being monitored by Shamla, and she'll be sure to pass the question along to me and Carinta. All right, cool. Let's get started. So just a bit of background to start off. In 2019, the Department of Finance released an amendments package to the Proceeds of Crime Regulations, and it had a really great title. It's called The Regulations, Amending Certain Regulations Made Under the Proceeds of Crime, Money Laundering, and Terrorist Financing Act. These were the regulatory amendments with the broadest scope that have ever been released. I wish we could talk about all of them today, but I've really kind of just bold-faced the topics that we'll be discussing today. The amendments that were included in that package, have been implemented according to a phased approach. So the changes around acceptability criteria for identity verification, that came into force the day that those amendments were released. Other changes, like the requirement for dealers in virtual currency and for foreign MSBs to register as FinTrack, came into force in June of last year, but the bulk of the amendments still haven't come into force, and they're coming into force in June of this year. So despite all of the amendments that were in that 2019 package, the Department of Finance decided that they still had not accomplished everything that they set out to do. And in June of last year, they released a second set of amendments with an even better title, Regulations, amending certain regulations made under the Proceeds of Crime, Money Laundering, and Terrorist Financing Act. I love that. And these new regulations were released primarily to harmonize the politically exposed persons and beneficial ownership requirements across all of the reporting sectors. So basically, this means for MSBs that as of June of this year, MSBs will have new requirements relating to PEPs. All right, so now that we've gotten that background out of the way, let's dig into those amendments.
Just as we dig in, Adam, if I could just
Sure.
interject just for a bit of insight. So one of the great things about the association and as it exists is that FinTrack and the Department of Finance consult with the association when things like amendments are happening. So while it's not perfect and while our voice is not always heard, the great thing is that they do come to us and bounce ideas off of us as they're coming up with these. So it doesn't fit everyone, but at least we're being consulted in this process, which is awesome.
No, it's true. It's so awesome that the MSB Association talks to FinTrack on the industry's behalf with a single voice, right? So it's really important.
Mm-hmm.
Okay, so let's talk about incoming EFTs. So currently, MSBs are required to verify the identity of an individual that sends $1,000 or more, and that's either domestically or internationally. And there's also record-keeping requirements for those transactions. But currently, there are no identification or record-keeping obligations relating to incoming EFTs. So when we paid $1,000 or more out to a beneficiary. But that's going to change as of June 1st, 2021. But unlike outgoing EFTs, MSBs are only required to verify the identity or keep records when they pay out to a beneficiary of an international EFT of $1,000 or more. So there's still no requirement for incoming domestic EFTs. And if you see here, the contents of an incoming international EFT record is pretty similar to the content of an outgoing EFT record in terms of information about the sender and the beneficiary, information about the transaction, and information about any affected accounts. So Carinta, what talk has there been about this new change in the industry? What needs to be done in order to successfully be ready for this new change by June?
I think when we talk about incoming EFTs, it's been the topic of a lot of conversation over the years. In particular, the reporting of incoming EFTs. So once we get to the level that you're reporting, the MSB would likely have taken some good ID from their client, so the beneficiary of the funds. But the reporting of it was always a little bit. It was designed in a not so intuitive kind of way. So we're hoping to see some changes in that, along with the changes that are coming to the ID piece.
Absolutely. Like I'm sure that there's, from my experience, a lot of EFTs in any case, were already verifying the identity of their of the beneficiary. I mean, I don't know too many EFTs that were handing out to $1,000, or more to somebody without actually checking their ID first.
Mm-hmm.
So, but
and I think, I mean, just from my experience in the conversations I've had, and of course you would know better because you've been on the examination side of MSBs in the past. But it sounds to me like a lot of the MSBs are really operating at an ID even below the $1,000 level. They really want to implement kind of best practice and really know who their clients are, even if they're not hitting that $1,000 number.
For sure, and I guess at the very least, for those MSBs that aren't already doing it, they need to make sure that their policies and procedures are updated with this new requirement, of course, and that their staff is trained to comply with these new ID and record keeping requirements.
Mm-hmm.
I mean, I know that one of the things that a lot of our clients have been doing is kind of reaching out to us and getting us to do kind of a gap assessment of their policies and procedures against the upcoming regulations as a whole, just to make sure that they're complying with all of the new obligations.
That's awesome.
Cool. So another thing that MSBs need to be aware of is that there's a change is coming with respect to who's responsible for submitting EFT reports to FinTrack. So prior to June 1st of this year, this responsibility falls to the last reporting entity that receives the payment instructions before sending the instructions out of Canada, as long as the name, address, and account number of the sender is included. So if we look at this example here, we have an ordering client that asks an MSB to send an international EFT to a beneficiary outside of Canada. So here the MSB passes those instructions to their bank, who ultimately transmits the instructions to the receiving institution outside of Canada. So in this example, it's the MSB's bank that would be responsible for submitting the report to FINTRAC. And that's,
Adam, can I
sorry,
jump
yeah,
in here? Yeah,
sure.
that's okay, because this is a beautiful illustration, and it's one of my favorite slides that you've kind of laid out, because it gives you a really clear picture of who should be doing the reporting. But I have to tell you from personal experience, I remember being in an examination at one point. It wasn't FINTRAC, it was an effectiveness review that we were having done, and I was challenged on whether or not I knew for sure that the bank that we were using had actually submitted the reports needed to go to FINTRAC. And since I couldn't say with certainty, it was encouraged that we actually do those reports so that we know, for sure that those reports have gone in. Would your advice kind of follow that better to be safe than sorry, and over-reporting is better than under-reporting?
Well, okay, I would say that over-reporting is better than under-reporting because there is no penalty for filing an unnecessary report where, there's obviously monetary penalties or potential monetary penalties for failing to submit a report. I will say that as long as the requisite information has been provided with the instructions to the bank, the reporting obligations fall to the bank, not to the MSB. So, at that point, I don't know that there's an obligation to confirm that the bank is filing that report, because it's actually the bank's report to file at that point, as long as the information has been provided.
Okay.
Adam, I have a question
Sure.
from one of our participants. It's to ask if anyone else was asked by FINTRAC to not report EFTOs when sending internationally, because this person works with a third-party MSB in London, UK, for liquidity in 40 currencies, and FINTRAC stated that it would be up to this partner's MSB to do the reporting, and asked that we not do any reporting. Would this change in June 2021?
Yeah, I mean, to be honest, like it really depends on how the flow of the funds. I'm not really. I guess the answer is I don't really have enough information to kind of comment on that. Generally, as it stands right now, as long as the EFT is initiated by a client, it's the last Canadian financial entity or reporting entity that touches those instructions who's responsible for submitting that report before they go outside of Canada. So if it went to a reporting entity, or sorry, a financial institution in the UK, it's not the financial institution's responsibility to submit that report to FINTRAC. Based on the information that I have. Is there any other questions around that, Shamla?
No, there was just a statement by one of our other attendees that FINTRAC is wanting to avoid double reporting, and therefore the reporting falls to the bank or financial institution. But we should make mention that we're always available to answer questions after as well if you need more specifics.
Absolutely. If you have a specific instance that you're willing to discuss, please, feel free to reach out to me directly, and I'd be happy to walk through that. So as of June 1st, 2021, that responsibility is changing a little bit. So the new regulations introduced the concept of initiation. So with respect to EFTs, initiation means the first transmission of the instructions for the transfer of funds. And so now it's the initiating reporting entity that's responsible for submitting the report to FINTRAC. So in this example, when the MSB transfers the instructions for an international EFT to their bank, they've transferred those initial instructions, and they've initiated the transfer. Therefore, it's the MSB's responsibility for reporting the EFT to FINTRAC, and that's regardless of whether they provide the originator details to the bank.
So this is going to close that gap for the attendee that was wondering about the other MSB, whether or not they had to report.
Yeah, well, that's exactly right, because if you're the one who receives the instructions and then transfers those instructions, it doesn't matter. If you receive the instructions from a client and then send that initial transfer instructions, it doesn't matter who you send it to, you're responsible for filing the report.
Mm-hmm. Adam, a couple of years ago, we had FinTrack visit us during one of our spring training events that we held in Toronto. And the visit I'm thinking of in particular, they shared with us some of the deficiency information that our industry had had when having FinTrack reports done, and EFTs were one of the topics that were notable. So we had some notable deficiencies in this area. So I think just as an industry, it's really important that we understand the obligations and really get prepared to meet the new obligations, because it's been identified as an area that we were maybe struggling with in the past, and we want to make sure that we don't struggle with it in the future.
Yeah, I mean, and then I guess just to kind of complicate things here, I mean, the format of those reports is going to be changing over the next few years as well, where there'll be additional information that needs to be included, and FinTrack is also combining SWIFT and non-SWIFT reports into a single reporting schedule. So it's something that MSBs are definitely going to need to focus on over the next few years.
Sorry, Adam. One of our
sure.
comments was that this person was under the impression that MSBs always had the obligation to report.
So MSBs have the obligation to report if they're not sending it to another financial entity inside of Canada if they're not sending it to another financial entity in Canada before those instructions are sent outside of Canada. So if they're sending it directly to a receiving institution outside of Canada, then absolutely it's the EFT's responsibility to report. Also, if they're sending it to a financial entity in Canada, but they're not transmitting the name, the address, and any affected account numbers with the instructions, then it's still the MSB's responsibility to report. But what's changing now is that now it doesn't matter if it's being sent. Like if we look in this example here, the MSB is sending it to a bank to send it outside of Canada. But that doesn't matter anymore. Now it's the MSB's responsibility to report, regardless of whether they send it directly out of Canada or whether they send it to another financial institution inside of Canada before it gets sent outside of Canada. Where before, so if we step back one more slide here, because the MSB is sending it to a bank inside of Canada, who is then sending it outside of Canada, here it would be the bank's obligation to report. But that's only true up until June of this year.
So I can just shed a bit of light on this because I've had some personal experience with the obligation to report and that the MSB that just mentioned that they were under the impression that it's always the MSB's responsibility to report. And I was under the same direction, even though the guidance clearly is outlined the way that your pretty picture has shared. I remember a point in time, this is many years ago, where we were found deficient because of unreported EFTs, in spite of the fact that at the time we had provided our financial institution with all the information necessary to file the reports, and we were tasked with, I don't even remember how many thousands of reports that we had to back enter. So I can appreciate and basically from that point forward, we've always gone with the over-report rather than under-report mantra, because I never want to have to back enter months of data anymore. But also just to be sure, just to be careful.
Yeah, I mean, and that's a fair point. And I guess the nice thing is that as of June, that will be cleared up.
Yeah.
You know, there is no confusion about whose responsibility is to report anymore.
Mm-hmm. So even though the onus is now shifting officially to us, at least it's clear.
Exactly.
Yeah.
So things are very similar for incoming EFTs. So it's the first reporting entity that receives the instructions from outside of Canada that's responsible for submitting the report to FinTrack. So in this case, it would be the MSB's bank. And similarly, just like the new concept of initiation for outgoing EFTs, the new regs have introduced the concept of final receipt for incoming EFTs. And final receipt means the receipt of the instructions by the person or entity that is to make the remittance to a beneficiary. And it's the final recipient that holds the responsibility for submitting the report to FINTRAC. So in this example, even though the MSB is receiving the instruction from a bank inside of Canada, it's the MSB that's paying out to the beneficiary. Therefore, they're the final recipient, and they're responsible for submitting the report to FINTRAC.
The tricky thing with this new obligation, and maybe it'll pave the way for changes. I know for myself, sometimes it's not always easy to get information from our bank to fill in all those required fields. So we usually try to collect them from the client. That the difficulty then is that you never know with 100% certainty kind of what the originating bank account number was or what the originating bank was and things like that. So this new obligation is going to, I think, give us reason to really push back on our financial institutions to share that information.
No, that makes a lot of sense. All right, so you know what? Let's go to our first poll. So if you look in the chat window, Shamala is posting our first poll question there. And we'd like to know how MSBs are reporting their EFTs to FINTRAC right now. Is it manually through FINTRAC's F2R system, through batch reporting, or does your bank submit reports for your international EFTs on your behalf? Let's take a minute and take a look at those polls. All right, we still have a couple of answers coming in, so let's just give it another few seconds here. Okay, so it looks like the vast majority of people are submitting through F2R, with a significant number posting through batch as well. So I mean, it doesn't sound like this is going to be too much of a stretch for most MSBs because they're already submitting EFTs, anyway. So what do you, Carinta, what do you think that they need to consider, considering that the new schedules and the new information that needs to be collected for EFT reports?
I mean, training is everything, right? So really wrapping your head around ensuring that you're collecting the information that you're going to need, and then preparing yourself well ahead of that deadline to make sure that you don't run the risk of, scrambling at the last minute, and that'll result in stress and late reports, and that's another deficiency. I mean, any change is difficult to deal with, so I'm really sympathetic to everyone that has to kind of spend the time and energy and money on doing that. The batch reporting, anyone who's kind of doing reporting in an automated kind of system is going to have to incur some costs, right, in adjusting their systems. So preparing for that. I mean, it's a little bit, we're down to the wire now, so we're a couple months out, but it's time, if you haven't already kind of gone over the new regulations, it's time now to really dig in and understand them because we're on a countdown.
Yeah, no, it's so true, and I can only echo what you say about starting the planning for this well in advance, because especially for those who are reporting by batch, because those system changes are going to be fairly significant, I think. And luckily FINTRAC has kind of given a bit of leeway here, well, a fair amount of leeway, because mainly because they're not ready to accept the new report formats. So MSBs will continue to use the existing reporting formats, which until the new system is launched, which I believe is 2024.
Adam, I have a few questions here.
Yeah, great.
Sorry, I just have to scroll back. So one of the questions is, moving forward, clients provide IBAN codes and SWIFT ID, but not necessarily an address of the receiving bank. Do the EFTO forms ask for the address of the beneficiary bank?
You know, and I guess the honest truth is I don't have the new schedules memorized. I believe that IBAN is an option on there. I'm not sure if address is and address of the receiving bank is a mandatory field. It's definitely on there. I'm not sure if it's a mandatory field or not.
Okay.
But again, you know, if that's something you're interested in, please contact me directly. And I do have a breakdown of all of the new changes that are coming to the new reporting forms.
Okay, there's another question.
Sure.
The obligations to report, I guess, are they for 10,000 Canadian or equivalent or more and more? And what are the thresholds for the obligation to report as of June 1st?
Yeah, so those reporting thresholds haven't changed. So it's still $10,000 or more, or $10,000 or more within a 24-hour period. And we'll talk in that the way that $10,000 or more in a 24-hour period, the way that's aggregated has changed. And we'll talk about that in just a minute. I'll go into some detail about that.
Okay. And sorry, I'm reading some comments, but okay, here's another question. What about ACH payments? We do not receive the address of the individual in the bank report. How would that reporting work? And I think it was answered by another attendee. Okay, sorry, moving on. Okay,
perfect. So as I mentioned, you know, the 24-hour rule, that's something that's changing fairly significantly. So as things stand now, there's 2 transaction thresholds that trigger requirements for MSBs to submit a large cash transaction report or an international EFT report. So the first trigger is the receipt of $10,000 or more in a single transaction, and that would be cash, obviously, in the case of a large cash transaction, or an international EFT in the case of an EFT report. The second trigger is the receipt of multiple transactions of less than $10,000 from the same client in a 24-hour period that aggregate to $10,000 or more. And that's the so-called 24-hour rule. And as things stand today, that only applies to transactions of less than $10,000. So let's look at an example of that. So here we have 2 examples representing, let's say, cash transactions. So in the first example, we have 4 transactions conducted in a 24-hour period. So the first transaction is $10,000, which meets the reporting threshold for submitting an LCT on its own. Then we have 3 subsequent transactions of $3,000, $2,000, and $1,000. However, if we add up these 3 transactions of less than $10,000, they only total to $6,000, and it doesn't meet the $10,000 within a 24-hour period, and therefore no reporting is required. If we look at the second example, so again, we have 4 transactions within a 24-hour period. And like our first example, we have a first transaction of $10,000 that meets the threshold to report. But unlike our first example, our 3 smaller transactions do total to $12,000, which is more than the $10,000 threshold. And that does trigger a requirement to submit a large cash transaction report. Now, as of June 1st, 2021, the new regs have changed the way that transactions are aggregated for determining reportability. So before, the 24-hour rule only applied to transactions that were valued at less than $10,000. But starting in June, MSBs will be required to report all transactions that are received from or on behalf of the same client within a 24-hour period that totaled to $10,000 or more. So let's look at the same cash transactions that we looked at before. So when we looked at the first example before, we determined that the first transaction was reportable, but the following transactions were not, because we aggregated those separately from the $10,000 transactions, and it only totaled to $6,000. But as of June 1st, we would aggregate these all together because they're all received from the same client within a 24-hour period, And so we have 4 transactions that total to $16,000 they're all received from the same clients, and therefore all 4 of these transactions would be reportable on an LCT report. And it's the same kind of idea in the second example, where we have 4 transactions within 24 hours that if we take them all together, they total to $22,000 and are therefore obviously reportable. So the new regs also address a bit of a quirk with how we aggregate international EFT transactions under the 24-hour rule. So currently, we total transactions that were originated by the same sender, but not transactions that are received by the same beneficiary. So in these examples, the transactions on the left would be reportable because we have one sender sending multiple payments to multiple beneficiaries, which total to more than 10,000. But the example on the right wouldn't trigger reporting requirements because we don't aggregate transactions that are received by the same beneficiary. So the new regulations address that loophole, oversight, whatever you want to call it. And as of June, MSBs will need to report transactions that trigger the reporting threshold based both on transactions that are originated by the same sender, as well as transactions that are received by the same beneficiary. Shamla, do we have any questions?
No, you're doing really well, Adam.
Thanks.
Adam, this was a slide that I don't know if you remember, but when we were going over the slides last week, this triggered a conversation between us. And I think that it's worth, as an MSB, especially if you're an MSB that's an agent of another MSB, in addition to providing your own MSB services, this is an interesting scenario because the new aggregation rules here, where if you have a recipient of funds, you're looking at all the funds coming into them from different channels, wouldn't include funds coming into someone from another MSB. So say, for example, if you were an agent of Western Union or RIA or MoneyGram, you wouldn't include those totals in your aggregation calculation. So if you had incoming wires totaling, say, 8,000, but that final 4,000 was coming to them through Western Union, that wouldn't be part of your calculation. But it might give you cause to ponder an STR. I don't know.
Yeah, no, it was a really great conversation, and it's a good point, because obviously MSBs that are acting as an agent for a RIA or a Western Union, those reporting obligations fall to RIA or Western Union. But if you're and like you said, if you're an MSB yourself and some of the transactions are being conducted by the same person, when you're acting as an agent or Western Union, and some of them are being conducted when you're acting as for yourself as an MSB, it wouldn't trigger EFT requirements, but you make a really good point that might be something that you need to ponder about why the client is conducting the transactions in that manner.
Adam, we have some questions.
Sure.
It says, will F2R be set up on June 1st to accept the new 24-hour rule obligations, or will we have to wait until 2023, 2024 when the new forms are ready?
I guess the honest answer is I'm not 100% sure. My understanding is that it will be set up to accept the new 24-hour rule, just not the new reporting forms. So it will accept, for example, EFTs that are sent by, that are received by the same beneficiary.
Perfect. And can you give an example on this aggregating EFTs as of June 1st, 2021?
Yeah, so if we go back to the examples that we looked at here, right? So if we look at the first example here, the first transaction there would be reportable, but under the way things are currently aggregated, those transaction 2 through 4 would not be reportable because they only totaled $6,000. And for the 24-hour rule, as things stand right now, we only look at transactions that are less than $10,000. So because those subsequent 3 transactions only totaled to $6,000, that would not be reportable. But that's changing as of June 1st, where we would look at all of the transactions above $10,000 or below $10,000, total them together, and see if they total to so everything that's $10,000 or more and then any other subsequent transactions that are less than $10,000 that totaled, within the 24-hour period would be reported. So here we would have $16,000 instead of $6,000 and $10,000.
Just one more question, Adam. It's another attendee said to clarify, if one client orders 2 or more wires to different beneficiaries and the total value is $10K, do both wires need to be reported? Sorry,
can you repeat that one more time, Shamala?
If one client orders 2 or more wires to different beneficiaries, but the total of the value is $10K, do both wires need to be reported?
Yeah, so that's the 24-hour rule, and that's how things stand right now. So if you have one sender, multiple beneficiaries, and the total of those the total value of those wires total to $10,000 or more, then that triggers the 24-hour rule, and that needs to be reported. That's in place right now, but it will still be in place as of June 1st. So, you know what, Shamla? Let's go to our second poll question. Let's throw that into the chat. We'd love to know how MSBs are aggregating transactions that occur at different locations, so different agents or branches, different offices. How do you aggregate those transactions?
While we're waiting for the response to that, Adam, we do have one more question.
Sure.
Sorry, I'm a little slow. My computer's not working for me. What about the same conductor for different corporations?
Yeah, so, that's a really interesting question. Same conductor for different corporations. And again, I would have to go back and look at exactly how the regs are worded, but I believe the way it is, it's about, you have to report if it's sent on behalf of the same individual, I think is the way that it's worded right now. That's changing though, where it's going to be on behalf of the same individual or entity in June. But I think the way things are sent right now is that if it was sent by the same individual representing different corporations, that would trigger the 24-hour rule.
Thank you.
So it looks like that most people here who do have multiple locations are relying on some sort of automated system to aggregate those transactions, which is great to hear. So, Carinta, in your work with the association, is that kind of consistent with what you see? Do you deal with a lot of I guess they're more smaller organizations that are kind of manually aggregating across?
Yeah, this is a topic of conversation that comes up often with our membership, and especially when FINTRAC is visiting, because it's been more than once now that FINTRAC has come out and said that having a completely manual process just doesn't cut it anymore. But we see several of our MSBs are still operating in a very manual way. So, I mean, I think, as rules change and as obligations increase, I think that's going to give enough pressure to justify the investment that, automation kind of requires. This is a little bit off topic, but I think it's interesting. So I was in a networking event recently, a virtual networking event, and I had the opportunity to chat with someone who, in a previous role, was working in one of the big 5 banks compliance departments. I'm not going to name the bank, but interestingly enough, that bank also has hurdles with identifying the 24-hour rule when it comes to cash across their branches. So apparently there was a loophole in their own system that, if a single client was doing a cash deposit within 24 hours in 3 different branches of theirs, their system wasn't identifying it. So this is a real problem for the biggest institutions in Canada. So I can imagine it's something that's going to be a hurdle for smaller organizations as well. But I think the dedication that I'm seeing from MSBs will show that we can do better. We can do better than what some of the big players are doing.
Yeah, so I mean, I'm sure it's comforting for a lot of MSBs out there to know that they're not alone. That there's a lot of MSBs that, or sorry, a lot of bigger players that are dealing with the same kind of thing. But as you said, it's still something that needs to be addressed. It comes up a lot in FinTrack examinations, and I know that when we do audits, it's something that we look into as well. So important for avoiding potential deficiencies.
Sure.
Okay, so this next amendment has actually been enforced for a couple of years now. It came into force the day that the 2019 amendments were released. So prior to those amendments, the requirement when verifying identity was that identification documents needed to be original, valid, and current. And that requirement for original documents was a real challenge because that meant that electronic images or scans of an ID document didn't meet the standards of the regulations, which made non-face-to-face ID a real challenge. And the 2019 amendments changed all that. The acceptability criteria for ID documents, it changed it from original, valid, and current to authentic, valid, and current, which really, opened the door and gives MSBs a lot more latitude to verify their client's identity in a non-face-to-face environment. So in support of this new requirement, last year, FinTrack released new guidance around client identification. And this new guidance specifies that reporting entities need to have a method of authenticating client ID documents. So whether that's a physical examination of the ID in a face-to-face environment, or relying on a technology solution to evaluate the authenticity of the ID for non-face-to-face identification.
Adam, this is just bringing to my memory another situation similar that we've run into in the past. And this is when we look at using a third party, because that's what this would be, right? Using a third party to authenticate some of the ID that we're looking at. And I think about the third party service providers that are giving us access to PEP lists or watch lists, and FinTrack's guidance on the fact that even though you're using a third party, it's still the onus of responsibility still rests with the MSB. So it's up to you to make sure that even though you've got a third party that's authenticating it, it's up to you to figure out whether or not that authentication is valid, right? Like, you can't just kind of say, well, I've got someone else who's taking care of this, so it's not my problem. It's still your problem at the end of the day.
Oh no, it's an awesome point. I mean, the digital ID vendors are not reporting entities, but MSBs are reporting entities. So if that digital ID solution fails, it's the MSB who's going to be getting the deficiency, not the digital ID vendor. So yeah, no, it's an awesome point. So let's go to another poll. And we'd love to hear how you're currently verifying client identity. Are you primarily doing face-to-face identification or primarily non-face-to-face? Okay, so I mean,
interesting.
Yeah, it is. I mean, face-to-face has a slight edge there, but it's fairly even. And
I almost wish we could go back in time and do this poll 2 years ago,
pre-COVID. I was just about to say that if we did this 2 years ago, I'm sure that face-to-face would be the overwhelming winner there. So is this pretty consistent with what you've seen in working with the working with the association and talking with MSBs?
Well, it's interesting because, yeah, like I said, 2 years ago, I would say my guess would be that the numbers would be, more like 75-25.
Yeah,
No way to prove that at this point, but I think COVID has given us an opportunity to, look at different ways of doing things and providing more distance between ourselves and our clients. So this is encouraging that at least the timing of the guidance kind of came out to allow for that.
absolutely. And so for those MSBs that are doing non-face-to-face identification, how are they selecting a provider?
Well, I know in the past we have invited providers to our different events to basically, show and share the solutions that they can provide. The feedback that I just get from the crowd always tends to be it's a very price kind of driven industry, so they're really looking for an affordable solution that will give them what they need. That's definitely one of their highest priorities. One of the questions that have come up though, when the shift in regulation first came into being, the question that we got from quite a few clients was whether or not if they had clients that they had ID'd under the previous rules, and the client continued to be a client throughout time, do they now have an obligation to re-ID them now that there's a new way of doing that?
Yeah, no, it's a totally reasonable question. I hear that from clients sometimes too. And I guess the answer is no, that if you verified the identity of a client using a method that was accepted in the regulations at the time that you ID'd the client, you don't need to verify their identity again, as long as you kept the proper records that you needed to, based on the regulations that were in force at the time. And I just want to mention that, for people who are looking for a digital identity solution, the Digital Identification and Authentication Council of Canada, so that's the DIAC, they maintain a directory of ID products that are worth looking at.
Thank you. That's great. That's a great resource.
Adam, a few people have asked, how do you authenticate a foreign passport or use a dual method to verify somebody?
Yeah, so foreign passport, again, same way you would use any kind of domestic piece of identification. So if it's face to face, you're basically physically examining it and making sure that there's been, evidence of tampering, making sure that the holograms that are supposed to be there are in place. And if you're using it online, then again, you need to have some sort of technology solution that can kind of scan that document and confirm its authenticity. As far as the dual process, so there is no requirement. Basically, when you're using dual process to identify somebody, at that point you're looking at valid and current documents. The requirement to authenticate the document is not there when using the dual process. That's only there when you're using the government photo ID methodology, according to the guidance that was released by FINTRAC.
Adam, I have a question that's come to me specifically through the different membership over the past year. And I know that with COVID and with things not being able to be renewed as easily as they once were, Canada has in many ways kind of said, you know what, we're going to basically extend past the expiration date on ID and you can consider them still valid. Would you say that the same approach can be taken for people that have been stuck in Canada and can't leave and are now, holding an expired passport? Can we accept that as valid ID?
Yeah, FINTRAC released some guidance right at the beginning of COVID, basically said that, ID that expires after, I don't remember the exact date, it was March something, that for the time being, that can be accepted as valid ID. Just for the reason, the exact reason that you just outlined there, that, it's difficult for them to, or in some cases impossible to renew the ID.
Adam, we're running short on time. We still have to talk about PEPs.
Okay, let's forge forth. Okay, so PEP determinations, obviously nothing new to the MSB sector. And since 2014, there's been a requirement to make PEP determinations whenever an MSB sends or receives an international EFT of $100,000 or more. Starting in June, though, there'll be a new PEP transaction trigger. So for all of you dealers in virtual currency out there, you'll also be required to make a PEP determination if you send out a transfer of virtual currency of $100,000 or more, or if you receive a transfer of virtual currency of $100,000 or more that's supposed to be remitted to a beneficiary. There's also some PEP determination triggers around business relationships. So first, we need to determine if a client is a PEP when the business relationship is first established. And we have to keep making these determinations on a periodic basis for as long as the business relationship is enforced. Lastly, we need to make a determination if we detect a fact that leads us to suspect that our client might be a PEP. For example, if we determine that they work at an embassy or consulate, that would trigger us to make a PEP determination for that person. And the type of activity that triggers a PEP determination, so that will also determine the type of PEPs that we need to be on the lookout for. So for transaction-based triggers, and remember those are sending and receiving international EFTs or transfers of virtual currency of $100,000 or more, we need to determine if the individual is a foreign PEP, a domestic PEP, a head of an international organization or HIO, or a relative or close associate of a PEP or a HIO. Now, strangely, if the PEP determination is triggered as a result of a business relationship, we're looking for the same types of PEPs for the most part, but for whatever reason, we're only required to determine if the individual is a close associate of a foreign PEP. I mean, operationally, I can't see that this would make much of a difference, but I just thought it was kind of weird that for business relationship-based PEP determinations, FINTRAC doesn't care if the client is a close associate of a domestic PEP or a head of an international organization. Anyway, I just thought it was weird. Now, one thing that hasn't changed is that foreign PEPs are automatically considered to be high risk. And if the client is a domestic PEP or a HIO, we need to conduct a risk assessment to see if they're a high-risk PEP or HIO. But if we do determine that they're high risk, the actions that we take depend on what triggered the PEP determination in the first place. So if the determination was made as a result of a business relationship trigger, so that's either entering into a business relationship, a periodic determination, or detecting a fact that the client might be a PEP, we need to determine the client's source of wealth. So in other words, where does their money come from? What's their financial profile? We also need to treat the client as high risk and conduct whatever standard DDD measures we do for high risk clients, like conducting more frequent transaction monitoring, for example. Now, the actions that we take for a high risk PEP are a little bit different if the determination was made as a result of a triggering transaction. So for outgoing transactions, and that's either an outgoing international EFT or an outgoing transfer of virtual currency of $100,000 or more, we need to take reasonable measures to determine the individual source of wealth, just like with business relationships. But we also need to take reasonable measures to determine the source of the funds that were used for the transaction. Lastly, the transaction needs to be reviewed by senior management. Now, for incoming transactions, so that's receiving an international EFT or receiving an international transfer of virtual currency of $100,000 or more, seeing as we're receiving the funds, we're not likely to have access to much information about the source of funds or the source of wealth. So in this case, we're only required to make sure that the transaction is reviewed by a member of senior management. And of course, if the client is in a business relationship, they need to be treated as a high-risk client and are subject to other enhanced measures like more frequent monitoring of the relationship. And lastly here, the time frame for conducting these PEP measures are the same regardless of what triggered the PEP determination in the first place. So within 30 days after the triggering event, we need to make the PEP determination, conduct a risk assessment if we determine that the client is a domestic PEP or a head of an international organization. And if we determine that the client is a high-risk PEP, we need to complete those prescribed measures, such as determining source of wealth, getting approval of senior management, etc. So Shamla, do we have time for our last poll here?
We have 2 minutes left, Adam. There's a few questions. It's And
Sure.
I think you answered that this new, it says, will the new PEP determination triggers be subject to the 24-hour rule or simply on a per transaction basis? And then
Yeah, no,
somebody made,
yeah, no, that's a great question, and this is for a single transaction. So, so if you do a transaction of an EFT of $50,000 and then the next day another EFT of $50,000, that would not trigger a PEP determination requirement. And sorry, Shamla, was there another question?
Another made a comment, relatives will be difficult without technology or asking every client for which you enter into a relationship. Sorry, something popped up on my screen. If they're related to a PEP, which means having to ask awkward or having to have awkward conversations with clients. Do you have any suggestions?
Yeah, no, it's a good question. I guess the answer is even with technology, that's not really such a reliable solution, because thinking about how many relatives and close associates a PEP can have, and commercial lists certainly can't keep track of all of them. At the same time, asking a client or getting them to sign some sort of attestation, that's probably, in my experience, the most common method that people use to make PEP determinations right now. At the same time, how reliable is it? You're really kind of relying on somebody to tell you the truth. And if somebody is trying to hide funds that are the proceeds of bribery or corruption, then they could very easily lie to you. So from an actual effectiveness point of view, yeah, there's definitely a challenge. There's no perfect solution. I'd say maybe it's a combination of methods. So maybe you're looking at an attestation as well as some sort of reliance on a commercial list provider.
I really think the awkward part is going to be more impactful when you're looking at source of wealth and source of funds rather than the determination itself.
Oh yeah, I totally agree. And actually, I saw that Dow Jones, I just saw the brochure, so I haven't actually seen it in action, but Dow Jones has an EDD tool that does a source of wealth search on an individual. So that's something that would be interesting to take a look at and maybe avoid some awkward conversations. Is there anything else, Carinta, that people have been talking about around the new PEP requirements in the industry?
No, not that they've come to me specifically with. I think the amendments are pretty straightforward. It's just, as always, a difficult one to feel confident about, right? There's just a lot of information that you don't have a way to verify. So, or there are tools for sure. We can use the tools, but I don't know that I feel 100% confident in the results that we're getting.
Totally agree. Yeah, and I guess with the new business relationship requirements, FinTrack has added, or Minister of Finance has added a little bit of complexity for MSBs in terms of when those PEP determinations and how those PEP determinations are conducted. Okay, so I think we're just about at time here. So thanks so much, Carinta. It's been great talking with you, and thanks for
thank you.
Insight your experience. And thanks so much to everyone who's attending our event today. And remember, Shamla is going to be putting a link to the survey in the chat window. So complete those surveys for a free copy of the AML Shops Quick Reference PEP Guide, as well as your certificate of attendance today. Lastly, be sure to follow us on LinkedIn if you'd like to be notified of future upcoming events. So have a great afternoon, everyone.
Awesome. Have a great day, everyone.
AML Shop, yeah. AML Shop, yeah.